All right. It is 8:02. Good morning. This is the Gold Fix, and I am Vince Lanci. Right now, gold is trading 1285 spot oh 04. And it has been in a choppy range all night around the 1285 area. Silver, as discussed yesterday, consolidated in that 1530 area and has since rallied a bit, currently trading at 1539, 1538, 1540, depending on where the bid ask is at the moment. So we will look to buy silver just as an early heads up. We're not committing to it, but we're looking to buy silver for a multi-bar trade later in this broadcast. We'll discuss that a little bit and why we may do that and why we shouldn't do that. Um, uh, Yesterday, gold started strong despite no appreciable move in the DX. The DX was a little bit stronger, but it was mixed against the yen. Uh, it then proceeded to stall at 1285 and broke lower. If you're following along with the chart here, we're talking about the market starting at the 22nd. This is an hourly chart. This is spot gold, which I will continue to use from now on, although levels will be given to trade in the front month. The market rallied in the first couple hours on the 19th. I'm sorry, the 22nd. And then during U.S. hours, starting during the London hours into the U.S. hours, right about here during the gold fix, the market sold off. Then it did touch an area. It did not touch, but it got close to an area of significant technical support, which was in the 1279 area. I have it drawn lower, but that line is not a perfect line, and bounced actually hard off of a level that I was going to consider adding to shorts. We traded that yesterday. We'll talk about that. And then defying everything else. Everything was down yesterday for, we'll call it a risk-off day to simplify it, even though I don't like that terminology. But as the stock market continued to sell off and the dollar sold off a little bit, gold rallied very strongly. I mean, very surprisingly, and did that even while the stock market continued lower. We'll discuss more of that in the macro section of the broadcast. As you can see from there, last night the market chopped around. 1285 was a number that it couldn't get above. I put a little rectangle there and put that out on Twitter last night. Tried to shoot above it around 3 a.m. Maybe have some London buying there, and now it's below 1285. So the market movers or market drivers yesterday were, if you want to put them what I think were the things that drove the market, were one. This drove most markets. The IMF revised global GDP expectation lower again, and we discussed that in yesterday's broadcast, and that basically monkey hammered Asian stocks. Europe stocks weren't as hit as bad. The DAX was down a little bit, but the U.S. stock market, the S&P, I think, was about down 8 to 10 handles by the time we got to our hours. Then housing stats for the U.S. were very bad, hugely bad, and this pulled U.S. stocks down further to close down around 1.4% per the SPX. 2,600 is now a hiccup away. The third factor, although I wouldn't call it a factor, but I would call it a negation of a factor, is that, with the chronic trade issues weighing on the U.S. And gold, let's face it, the protracted trade issues are not bullish for gold, although gold has held up rather well. In light of the mismanagement of the China trade talk expectations, Lawrence Kudlow, he of the suspenders and what do you call it, cufflink, wearing 1980s guy, was trotted out to jawbone markets a bit. And I don't have the charts handy but his pep talk had a half-life of about 2 minutes. It did little to stop the market slide. The market rallied as he was talking, and then the market proceeded to sell off. There is a big takeaway from yesterday's activity, not included in these three drivers, and that takeaway is when one sentence: yesterday, bad news was bad for the market. And that's not something that we've seen too much of in the last 10 years. And I'll get to why that's important when we discuss it in the macro section. In trades yesterday, we identified three potential trades First was a gold trade, and I'm going to put some of our indicators up there so you can see that a little bit. Yesterday was the first trade identified during, discussed during the gold fix, was right here, and I remember discussing it in this quickly as a recap. Uh, this was an RTM trade, meaning it was an inversion of the momentum trade, and basically said that below 1283 and change, um, you should consider to get short. And uh, around 8 a.m. when we started, the market had just rallied, and I looked at that as uh, do nothing during this rally because it might actually be a bear flag on the hourly chart. We could skyrocket, and then this happened between 8 and 8:30, and now I'm a little bit more convinced because the flag is too long from a technician's point of view. And then when this bar was green, I was sure we were going higher, and we didn't. And as soon as it turned red, or right about when it went back into my target area, we shorted the market. Now, this is an RTM trade. This is a beta system, but it's actually very good. I just haven't figured out the proper optimization for parameters. But we sold gold in the 1283 area, and we risked one to make two. That was especially rewarding as our buy level, 1279 and change, was just above a technical level, again, of another discipline, and that was Michael Moore's level of 1276 area, the technician. I loved, and I actually said this in the chat, you could see it on Twitter or in the chat, Trade Blotter, that I liked buying it in the 1279 area because I risked one to make two. And if the market went below 1276, I would be probably look to short it again, depending on how my own momentum system reacted. And as you can see, the market did not saw 12. Here we go. Went down, and I covered. I'd say, right around 1279.20, covered right in here. And yes, I wish I could have gotten long, but that's not how I trade. Um, uh, and the market continued lower, and of course I said, oh, then it went back up, and I put my little line there saying if it gets back below there, let me look to short it again. And then luckily I took the money off the table, and boom. So I never risked more than one to make two on that trade. Um, and that was especially rewarding because it was a blend of a momentum system, which I use, with a technical system, which reinforced my not being a pig and getting out. The second trade was discussed on the AM roadmap with Larry Benedict, and it was a short of the SPY. And I want to put that up here because it was another, what was actually based on the ES. But I used the SPY because it's better for tight trading. The lines I had drawn before, but they were. I was just doing that. It's more of a hobby. But that was an hourly trade, and I had said yesterday during the AM roadmap, and it was almost a throw off because I didn't really think it would happen. Um, uh, I said, yeah, below, and you could see it on the Bollinger Bands. I'm not sure exactly what number I said, but it came in around 2649. It might have been a little bit higher at the time I said it. 2650. I'm not really sure. It might have been 2645. 2647 spot 80 is approximately where I said uh, 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 below 2647.80 and or 2645, the market is probably a sale. I ended up selling the SPY on that, risking one to make two initially, and I ended up risking none to make 1.1. And by that I mean, and I think this is important when you're looking at trades, I risked one, and then the market gave me one, and my level to buy was at two. And there are two reasons why I changed my risk parameters once I stopped my loss out. And I think this is important for any trader when you're using systems. I got nervous. And I got nervous because it was a light volume day. And we had discussed this during the AM roadmap that, uh, in light, in not light volume, but a light news day or a lackadaisical day, things that could be perceived as a trend could really be noise. And this slow move down yesterday for the first part of the day, maybe it was a 4 hourly that gave me such good levels. It was not. It was the 1 hourly. So the I got the short, and it's not a market that I trade a lot of, although I'm very comfortable with the system. And once